contract, works contract related to all kinds of books supposed to be stated under Rule 56 sub Rule 14. Now, electronic form of records along with the digital signature supposed to be maintained according to the Rule 56 sub Rule 15. Manually maintained accounts and records supposed to be done according to the Rule 56 sub Rule 16. Now, clearing and forwarding agent for delivery, challans, etc., all that supposed to be maintained according to 56 sub Rule 17. And whatever may be the records which supposed to be maintained under any law, that should be followed under Rule 56 sub Rule 18. So these are the rule-wise stated relating to the books supposed to be maintained under GST Act. This is what actually I think yesterday someone has asked me to discuss. So that I've taken into the account first of all to discuss. Now let us start with the valuation. The Unit 3, that is the Block 2. We are starting the Block 2, Unit 3, relating to the valuation, that is value of supply valuation rules for GST. Now, first, let us know value of supply. So, which has been mentioned under Section 15 of CGST Act, Section 20 of IGST Act, and the rules mentioned in the Chapter 6. Based on that, the value of supply need to be considered. And taking that as a base, we are supposed to determine the value of supply of whatever the goods or the services. Now, before to start with the value of supply, we have certain definitions which supposed to be considered, and we need to know those definitions for the calculation of value of supply. The first definition we have to take into the account is the consideration. What do you mean by consideration? Usually, whenever you want to purchase any commodity or when you want to render a service, for that, some consideration, that means some payment, some monetary value should be fixed. And whatever may be, whoever may be the person, but the amount should be the same, it should not change. That is called as a consideration. So they say any payment, but it should not include any subsidy or a discount which is given by a central government or a state government. So that's the reason why they always say a consideration, any payment made to or to be made, whether in a money or otherwise, in respect of, in response, or for inducement of the supply of goods or services or both, whether the recipient or by any other person, but shall not include any subsidy given by the central government or the state government. So it is any payment. Now, the monetary value of any act in respect of or in response to or for the inducement, the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or the state government. So here also the money value, monetary value, that means the value of the goods or a service which is expressed in rupees, that we have to consider. And they say that it should not include any subsidy which is provided either by a central government or a state government. And any deposit provided, the deposit given in respect of supply of goods or service or both shall not be considered as a payment made for such supply unless the supplier applies the deposit consideration for the said supply. So here they say the consideration means the payment in money, otherwise for the supply, or a monetary value of any act or forbearance for the supply. Now, the recipient or any other person deposit to be considered as a payment. If it is only considered as for the sake of payment, if the deposit is made, then it is called as a consideration, but not, it cannot be called as a deposit, cannot be called as a consideration. Now, excluding the subsidies which are given either by a central government or a state government, then it is called as a consideration. This is a definition which we need to know. Then we need to know the other definition is Now, before to go for the definition, let us discuss about who is called as an agent, who is called as, what do you mean by goods? Now, agent means including a factor, a broker, a commission agent, a deliverer agent, an auctioneer, or any other mercantile agent by whatever name called, who carries on the business of supply or a receipt of goods or services or both on behalf of another. Here, agent means a person. Who is a person? Person, he may be a factor. He may be a broker. He may be a commission agent. He may be a deliverer agent, auctioneer, mercantile agent. So here the name can be anything, but is a person who is carrying the business on behalf of the other person. That means your principal should be there. Principal is the owner of the business. So principal may not be doing on behalf of the principal. Maybe the agent is working on it. So he will be called as an agent. This first we need to know. The second, goods. What do you mean by goods? Goods means every kind of movable property. We have to take into the consideration only movable property other than money and securities. Money and securities cannot be called or cannot be defined under the definition of goods. Securities means stock exchange. If you take shares, debentures, etc., doesn't call as goods at all. Money is also doesn't call as a good. And it also includes, under the goods, it also includes actionable claim. Actionable claim is nothing but a right. Growing crops, that is agricultural products, whatever you take, that wheat, paddy, the grains, everything if you take into the account, the pulses, all that, growing crops also is being selling. So those are also called as the goods, growing crops. Now, grass and things attached to forming a part of a land. Now, you take the tree which is attached to the earth, unless it is served to cut, then it becomes a timber. So automatically when it becomes a timber, it comes under goods. So if it is in the form of a tree and attached to the earth, it cannot be called as a good. But once it is like bamboo sticks, the wood, etc., those once it is being cut from the earth, then automatically it forms a commodity. It comes under the goods. So that is the definition of good. Now coming to the definition of market value. Market value shall mean the full amount which a recipient of a supply is required to pay in order to obtain the goods or services or both of like kind and quality at or about the same time or at the same commercial level where the recipient and the supplier are not related. Now, usually we mean to say any commodity, if you send it to the market, it is fetching a value, a price. Fetching a price that is called as a market value. Here we will not consider the person is a related person. Here any person, for that matter, it may be any person for whom you are selling the commodity, it should fetch some price that is called as a market value. So it is a full amount which a recipient is required to pay. Then it is called as a market value. Then we need to know what do you mean by money. So the definition of money. The money means Indian legal tender. It is a legal tender or a foreign currency or a check or a promissory note, a bill of exchange, letter of credit, draft, pay order, travel check, money order, postal or electronic remittance, or any other instrument recognized by RBI, Reserve Bank of India, when used as a consideration to settle an obligation of exchange with Indian legal tender of another denomination, but shall not include any currency that is held for as a numismatic value. So this is what they say. That means a legal tender. India, money means a legal tender. Now, yesterday only 2000 rupees is treated as not a legal tender. So 2000 is now demonetization has taken into the account. So from now onwards, they see to it that 2000 is not to be called as an Indian legal tender, but any value which is treated as a legal tender, then it is called as a money. The next, we need to know the definition of a person. Here, usually in the income tax also, person is being defined as an individual, a Hindu undivided family, a company, a firm, a limited liability partnership, an association of persons, or a body of individuals, any corporations, corporation established under any central or state act or a provisional act, or any body corporate, a cooperative society, a local authority, a central government or a state government, society as defined under the Societies Regulation Act 1960, or a trust, or every artificial judicial person not failing with any of the above, all these being called as a person. Now, the next we need to know who is the recipient of the supply of goods or services, where a consideration is payable for the supply of goods or services, or both. The person who is liable to pay the consideration. Next, no consideration is payable for the supply of goods. The person to whom the goods are delivered or made available, or to whom the possession or the use of goods is given or made available. Where no consideration is payable for the supply of a service, the person to whom the service is rendered. So, reference to a person to whom a supply is made shall be construed as a reference to a recipient of the supply, and shall include an agent acting as on such behalf of the recipient in relation to the goods or services, or both. The next, we need to talk about the services. What do you mean by services? The services means anything other than the goods, money, or security, which includes activities relating to the use of money or its conversion by cash or by any other mode from one form, currency or denomination, to another form, currency or denomination, for which a separate consideration is charged. So supplier means in relation to any goods or services, or both, shall mean the person supplying the said goods or services, or both, or shall also include an agent acting on behalf of the supplier. Voucher means an instrument where an obligation to accept it as a consideration or a part of consideration for a supply. So these are the things which we have to consider before talking about the value of supply. Then, apart from that, one thing we have to take into the account is a related party or the related person. So, who can be called as a related person? In case a person or officers or directors of another business. See, persons, in between the persons, they may have a relationship. What kind of a relationship here is? It's not a blood relation. It is the business relation. If they have, then they are called as related person. Such persons are legally recognized as a partners in the business. Such persons are employer and employee. Any person directly or indirectly owns, controls, or holds 25% or more of the outstanding voting stock or shares of both of them. One of them are directly or indirectly controls the other. Both of them are directly or indirectly controlled by a third person. Together, they are directly or indirectly controlled a third person, or they are the members of the same family. So these are the persons supposed to be called as a related person. This is being defined under section 15, subsection 1. Unrelated parties. So they should not be related with each other. Then they are called, they are deemed to be, if they are deemed to be related, then automatically they will be, the value should not be considered taking that as a base. So suppliers to unrelated person where price is the sole consideration. Here the transaction value which is defined under section 15 subsection 1. Now transaction of a supply of goods or services is made between the two persons who are not related to each other. So who is related person first we know, then automatically we can able to know they are not related person. The price is the sole consideration for the supply. So here, this is usually we call the transaction value plus certain elements which need to be considered for the transaction value under section 15 subsection 1. Now coming to the section 15 subsection 2 gives you the information regarding to the inclusions in the transaction value. When you want to calculate the transaction value, there are the certain things which need to be included in the transaction value. Earlier, we used to call the transaction value as assessable value. Now, they have changed the nomenclature and say that it is a transaction value. Now, the transaction value is the taxable value, includes certain elements in the addition to price. So it is not only the price of the commodity. Over and above the price, there are certain elements supposed to be included. So what are the prices you have to, or what are the other things which we are supposed to add to the price of the product? When they say the price actually paid or payable for the supply, what actually the amount you are paying for the supply, that first we have to take, that we will call it as a transaction value. Other than the transaction value, any taxes or a duties or a fees or a charges levied under the statute other than the CGST or SGST or UT-GST Act or the GST Compensation States Act. If charged separately, transaction value under IGST will include taxes other than IGST and compensation sets in terms of a third provision to the section 20 of IGST Act. Now, what are the taxes, duties or fees or charges levied under the statute? Now, like let us say earlier we used to have the VAT. So to provide this VAT, what we are supposed to do is central excise duty is supposed to be added. Why? Because as soon as a commodity is being manufactured, anything which is a conversion has taken place. That means a raw materials is converted into a finished product. There is a need that excise duty supposed to be levied. So before to levy your sales tax, you are supposed to levy the excise duty. Once you're levying the excise duty, that should include in your price. That's the reason why duties or the taxes. Now, like let us say certain raw material supposed to transfer from one municipality to another municipality, their octroi duties are also levied. So octroi duties, excise duties, any other taxes, or any other fees supposed to be levied, all that supposed to be included, because without that you cannot able to get your input. Once your input is not carried, converted and finished product cannot be made. So in that cases, these expenses or liabilities are also is required for the conversion of the product. That's the reason why these are also supposed to be included. Earlier, we used to have separate taxes, but now we have a uniform tax system called GST. That's the reason why they say whatever may be the duties or the taxes, fees or charges levied according to the statute, then you can add these things to the price. The next, what they say is payments which are made to the third party. What are the payments which are made to the third party? An amount that the supplier is liable to pay, but which has been incurred by the recipient of the supply and not already included in the price. Like let us say some freight charges, something supposed to be levied by the person who have to send it to the market. But here the third party is paying on behalf of the supplier. In such cases, those amounts supposed to be added. Why? Because it is the value of the supplier supposed to be payable, but it is being paid by the third party. That's the reason why it should be added. The next, incidental expenses such as commission, packing charged by the supplier. Packing charges. See, any product, if you take into the account which need to be sent to the market without a packing, how can you send? See, paddy or a rice which you are sending to the market, you are sending through gunny bags. Now, because we doesn't have gunny bags, they are providing the other bags which are of plastic of such kind. So, which are being sent. That is 26 kgs bag which is being sent. Without that, rice cannot be sent to the market. Like that, coconut oil, either in the bottle or in some other form, a packing is to be made, need to be sent to the market. Even the talcum powder is also being sent to the market with a packing. So there are different types of packing also we have, like primary packing, secondary packing, and special secondary packing, like that. So which is to be included, which is not to be included. Now, like let us say primary packing. Primary packing, gunny bags is a primary packing. Without that, the commodity cannot be sent. So that packing material cost, the packing, everything supposed to be added to the product cost. Secondary packing, like a toothpaste, if you take into the account, the toothpaste has a tube, that is a primary packing. The primary packing is put into the cotton, which is the paper cotton which you are taking into the account, that is a secondary packing. That is also required to protect the product. So that's the reason why that is the packing which is required. That means primary packing and secondary packing. Even that cost is also supposed to be added into the cost. Now, a special secondary packing, like you want to give a gift. Already packing is there. Again, you want to give an order or a customer order stating that it has to be protected. That's the reason why a precaution has been taken beyond the actual primary packing. If any other packing which is being ordered by the customer, if that is being done, then automatically it is the special primary packing, should not be included in the price. So it is only because of the customer's requisition, probably this may be charged. So in such cases also, if it is an extra packing which is being asked by the customer, only for that customer will be added. But for other customers, it is not been added, but it cannot be added in the price consideration. Now, incidental expenses also, like freight charges, conveyance charges, those things are supposed to be added. Now, advertisement, that is also is required, because we have to give the publicity, the sales promotion purposes, whatever may be the ads which we are given, those expenses supposed to be added to the price, because such kind of a product which is available in the market, so that the consumer or the supplier, the third parties need to know that kind of a product is available and the utility of the product also. So that's the reason why those advertisement expenses are also supposed to be added. Now, interest or a late fee or a penalty for delayed payment of consideration, because it is an agreement which has been taken place between the two parties. And if it is being on time, if it is being done, then such interest or a late payment or a penalty need not be added. But if he breach the contract and is not paying the amount on time, so in such cases, those interest or late fee or a penalty is also supposed to be added back. Then subsidies provided in any manner linked to the price other than the subsidies given by a state or a central government. See, subsidies supposed to be added. Like let us say earlier, you may be able to know certain products which are available. If you pay 20 rupees, you will get, earlier used to get 50% of pack, now 75% of pack. That means the quantity which is being given more. So in such cases, here you will say that it is only 20 rupees. Earlier it was 20 plus 10, 30 rupees. But now for 20 rupees only, you are getting the quantity of 30 rupees quantity. That subsidy which you are giving, that also supposed to be added to the price for calculation of assessable value. So unless until, like state government or central government, like in the gas cylinder, whatever the subsidy was given by the state government or central government. So in such cases, usually the customer is paying a little amount, whereas the other amount which is supposed to be payable at factory cost, that amount, the difference amount will be paid by the central government. Even that is also being there into the account. So that's the reason why this is whatever the subsidies which are given by the state or central government should not be included here. But other than that, subsidies which are being allowed by the recipient to the supplier, then in such cases, those subsidies also need to be added back. So all these comes under section 15, subsection 2, the inclusions of transaction value. The next is price actually paid or payable for the supply. So whatever may be the value which is applicable between unrelated person, where a price is being called as a sole consideration for the supply, that need to be taken, that to be considered for the transaction value calculation. The next, they say that the taxes other than GST if charged separately by a supplier. Now, cess, there is a cess, GST cess are not a part of a taxable value, but other taxes or cess fees, etc., will form a part of taxable value. Like let us say a municipal tax in relation to the goods being supplied or bills the same separately. Such tax will form a part of the value of taxable supply. I told you octroi duty is the duty which is need to be added back because it is a duty which is levied from transferring the goods from one municipality to another municipality. Okay, so such kind of taxes supposed to be added back. The next, payments made to third parties by the recipient on behalf of the supplier in relation to supply. A supplier may need or incur various expenses in order to make a particular supply of goods or services. In the normal course, he would have paid these amounts and they would form a part of the value that he charges from the customer. However, the customer makes a direct payment of some such liabilities to the third party. The supplier does not include this amount in his bill. In such cases, he should add it back to the value of taxable supply. Now, incidental expenses, already I told you, it is a commission or a packing charges, which is supposed to be added back. Next, interest, late fee or the penalty. Regarding to that, they say the price which is charged for the delay in payment, those expenses amount supposed to be added back in the transaction value. Right. Now, coming to the exclusions of discounts from the transaction value, which has been stated under section 15, subsection 3. Now, here, what are the exclusions? Exclusions of discounts. Now, discounts like cash discount, trade discount, those discounts supposed to be allowed before or at the time of supply shown in the invoice. If it is shown in the invoice, then it could be excluded. Discounts that are allowed after supply in terms of an agreement that exists at the time of supply and worked out invoice-wise, and a proportionate input tax credit is reversed by the recipient. See, at the time, it should be mentioned in the tax invoice, then it is considered to be excluded. If it is not mentioned, afterwards, an agreement was taken into the account and it is being allowed. In such cases, those discounts should not be included in the computation of transaction value. So exclusions are also need to be taken into the account. Next, the supplies where value cannot be determined. So under section 15, subsection 1, under section 15, 2 and subsection 3, if you take into the account, which is not mentioned there, in such cases, the value of those supplies supposed to be determined under section 15, subsection 4 or 5. So they gave you here whatever may be the supplies which are not applicable in section 15, subsection 1. And you have to know what is the transaction value with a related party, without a related party. Because related party, that means they are business partners, business relationship they may have. In such cases, we will not consider the price which is being paid by a related party. We will consider the price which is paid by a non-related party. That is the price, we will call it as a sole consideration and determined. And in certain cases, what happens is, if the supplier is unable to determine the price, then we can approach to the authorities. The authorities, the proper officer will be in charge for determining the transaction value of that particular commodity. Because earlier, if it is not mentioned either in the schedules or in the act or in the classification of the goods, in such cases, the proper officer, we have to approach the proper officer whom he has assigned for the determination of such value. So we need to approach them. So that's the reason why this will be taken into the account. So he will have the right to assess the value. So these are relating to the valuation based on the certain definitions as well as the information supposed to be taken into the account. So now the valuation rules also we have. So let us see what are the valuation rules we have. Now, the rule 27 states about the valuation rules. Consideration is not wholly in money, determined as per section 30 and subsection 31. Here they say that whatever the value which is considered to be payable in money, if it is not payable in money, then that should be determined as per the rule 30 and 31. Now, the rule 28 states about the related person. So whatever the amount which is charged for a related person, that you have to consider the value which will fetch in the market. That price only we will consider. We will not consider the value which has been paid by a related person. Usually, the 90% of price charged in the market, that will be taken as a value for consideration or the transaction value. Now, rule 29 states about the agent. We already discussed who can be called as an agent. So there can be a relationship between an agent and a principal. So the agent is working on behalf of the principal, and whatever the amount he has charged, that's fine. That amount we will consider as a value. But if he is selling, the agent is selling to the principal, then there is a relationship between as existing employer and employee, master and servant relationship. If these two are relationship has been existing, in such cases, we will consider what actually the price which is fetching in the market, that we will take into the account. Under rule 30, the value of the supply based on this rule is on cost. They always say 110% of cost of production is considered as the valuation which is determined according to the rules for GST. And rule 31 is state about the residual method. So whatever the other methods which is applied for us other than the above method, that method we will be taking into the account, and we will work out what is the value for the determination of value need to be done. The next is rule 31A relating to a lottery or a betting or a gambling or a horse racing. In such cases, they say it is 100 by 112 of the face value of the ticket, or 100 by 128 face value of the ticket as notified by the official gazette. Whichever is higher, they will consider that value. So that will be taken under the rule 31A. Now, under rule 32A, that is certain supplies, The sudden supply is, if you take into the account that foreign currency. See, usually the foreign currency will be sent. So in such cases, 1% of the gross amount of Indian rupees you have to consider as a value, or a 5% of a basic fare in case of a domestic bookings like air tickets. If you take into the account, in such cases, basic fare of a domestic bookings, you have to take 5%. If it is international bookings, then they have to consider 10%. So this is how the values are being considered. Now we have LIC, life insurance services. Now here the life insurance services, the taxable value or a transaction value which need to be determined is equal to the gross premium minus the amount allocated for investments. So we have to take that as your taxable value. In case a single premium annuity policy, if it has been taken, in such cases, the taxable policy is equal to your 10% of single premium charged. That will be considered. And in any other cases, taxable value is equal to 25% of premium charged, or first year it is 25% of premium charge, and the subsequent years it will be charged by 12.5%. That should be taken. In case of the policy with risk is there, in such cases, whenever a risk is involved, then taxable value will be calculating is equal to the entire premium which is charged. That we will be considering. In case of second-hand goods, they are the dealers who will be selling the second-hand goods. Like let us say, if you, I think in New Delhi, I heard that one street completely is for second-hand goods. They will sell only the second-hand goods since the market itself is for second-hand goods. So in such cases, if the dealers who are dealing with second-hand goods, then value will be calculated, that is selling price minus the purchase price. Here we have to take into the account the selling price minus purchase price. There can be a negative value or a positive value. If it is a positive value, then that value we will be treating it as a transaction value. Whereas if it is a negative value, that means your sale price is less than your purchase price and you will be arriving at a negative. Then here the transaction value is treated as zero. They will not take any other value because the value is in negative. Now, coming to the next is a pure agent. This has been stated under Rule 33. Pure agent. Who can be called as the pure agent? Now, here they say any professional. Any professional, he or she may be called as a pure agent. That means a person who is acting as a pure agent, payment made by the pure agent, the supply is procured by the pure agent. These comes under the Rule 33. Now coming to the Rule 34, the rate of exchange of currency. That is as per RBI. RBI will give you a notification in the official gazette stating that into the account, whatever may be the rates of exchange of the currency notes, that will be considered for the value of your transaction value. And in any other case, let us say in any other case, like even the taxes are also included. In such a case, we have to compute. Then when we are computing, we have to take a formula here. The formula is the value of supply inclusive of IGST, CGST, SGST or Union Territory GST divided by 100 plus sum of the tax rate. This is a formula we have to apply because already in the value the tax is included. The component we want to segregate. When we want to segregate, we have to use this formula. Once again, I am repeating, the formula is value of supply inclusive of IGST, CGST, SGST, Union Territory GST divided by 100 plus sum of tax rate. Now, next coming to the open market value. How to evaluate the open market value? Now here, usually you have to take the PAN-based registration into the account. The company operating in 2 or 3 states has to take GST registration in all the states where it operates. So based on your PAN, the registration has been taken into the account. Now, you take the example as a Reliance. Reliance is there in Maharashtra. Reliance is also there in Telangana. In such case, there are two states are involved. Now, any stock transfer which has been taken place from Maharashtra to Telangana, usually it is from head office to the branch office, the goods are being transferred. So in such a case, we cannot calculate or determine the value of the goods here. But earlier, there is neither a tax is payable nor the valuation has been taken place. But now, what happens is, for a stock transfer between the two states, there is no movement of funds are being taken place. That's the reason why value is not considered. But GST need to be payable. You are supposed to evaluate the amount of GST, and GST is payable. So this is a new rule which has come into the picture when compared to the old rule and new rule. The old rule where because of a stock transfer, here the supplier or a dealer supposed to prove himself, because the evidence, he has to prove it with an evidence stating that it is a stock transfer. It is not the goods transfer for the sake of a sale. In such cases, there is no need to pay either a tax, or there is no need to compute the value of transaction value. This is earlier. But now, because GST was implemented, this rule has changed now. Even though there is no movement of funds between the branch office and the head office, but there is a need that GST is supposed to be payable on such stock transfer. So that need to be calculated. Okay. So these like any coupons, redeemable vouchers, now like 2,000 rupees. Now, if you go to the Reliance Trends, they'll give you certain coupons, right? Those coupons will be available, which can be used for further purchasing. And if you provide these coupons, then to that extent, the discount is allowed. So they say that whenever the coupons are being given back to the supplier, then that amount is also added back. You cannot deduct the coupon value from the value of the commodity. So transaction value, when you want to ascertain, then if the coupons or any redeemable vouchers which are being given to the customers, and those customers are providing, when the next time when they are purchasing, you have to add back these coupon amounts, and then only you can determine the transaction value. So all these comes under the valuation rules. Any doubts? Or should I, next chapter, next unit, can I start? Next unit, we have TDS and tax collected at source. Shall I move on to that? We have another 10 minutes to discuss. Shall I move on to the TDS, or do you have any doubts to discuss relating to the valuation? Okay, then I'll move on to the next is TDS, tax deducted at source. Now, usually any value, the contract value, which is more than 2.5 lakhs, that is 2,50,000, then they are charged 2% as a tax that need to be deductible. So a registered person who is required to deduct the 2%. And this 2% will be deducted 1% under CGST and 1% under SGST. If it is within the state, if it is outside the state, that is between the two states, then IGST also you have to calculate. So IGST, again IGST, CGST and SGST. These are the three taxes supposed to be levied. Now, a registered person, who can be called as a registered person? See, for TDS, when we want to deduct the TDS also, here the person supposed to be registered for the collection of the tax. Without registration, he may be a registered under GST Act, but again he is supposed to be registered under the TDS. So under the GST, he has to register under TDS so that he can be eligible to deduct the tax at source. So who can be eligible? Here, a department or an establishment of a central government or a state government. He may be a local authority or a government agency or any other category of persons as may be notified by the government. Only these people can be registered persons who are eligible to deduct TDS at source. Now, the persons who are notified to be deductible are as follows. They are any authority or a board or any other body which has been set up by the parliament or a state government with 51% of equity owned by the government, or a society which has been registered under the Societies Regulation Act 1935, a public sector undertakings. So these are the persons who are eligible or who are notified for the deduction can be made by these people. So TDS, the TDS will be collected on the value which is 2,50,000 you have to take into the account. On that, 2% will be charged. Okay, so here they say the registration of TDS deduction. A TDS deductor has to compulsorily register without any threshold limit. That is 2,50,000 limit is not stated here. Without stating the limit, he can be eligible to register as a TDS deductor. The TDS deductor has a privilege to obtain registration under GST without requiring a PAN. Without requiring a PAN, he can be registered. He can obtain a registration using his tax deduction and collection account number issued under the Income Tax Act 1961. Now, deposit of TDS with the government. As and when the amount which is deducted at source should be deposited to the government account by the deductor by 10th of succeeding month. In this month, like let us say we are in the May. In the May, if they are deducting the GST, that means they have to pay off by the month, next month, June 15th. So June 10th, before June 10th, they are supposed to pay the taxes to the government, whatever they have deducted in the month of May. Now, TDS certificate, a TDS certificate is required to be issued by the deductor, the person who is deducting the tax. And the TDS certificate should be in the form GSTR 7A. GST return 7A is the form which gives you the indication about TDS certificate. So that should be issued within 5 days of crediting the amount to the government. So that means by 15th of June is supposed to be issued the TDS certificate. And in case he is unable to pay the amount and there is a delay, in such cases, 100 rupees is the 100 rupees per day from the expiry of the 5th day till the certificate is issued. So certificate, if it is not issued by 15th of June, because from 10th of June, they are supposed to payable to the government, and within 5 days, they are supposed to issue the certificate. If they are delayed in issuing the certificate, then every day delay, they are supposed to pay 100 rupees per day till they issue the certificate. And the late fee would not be more than 5,000 also. That means it should not be extended up to 5,000. It should be paid, it should be, certificate should be issued before 5,000 penalty. Next, TDS return. Now, deductor who is also required to file a return in the form GST R7. See, 7A is for the certificate supposed to be issued whenever TDS has been done. And whenever TDS has been done, he has to file a return. That return should be in the GST return 7 within the 10 days from the end of the month. That is by June 10th, if any sales are taking place between in the May, then by 10th June, he is supposed to file a return and he is supposed to issue a certificate. All that is to be done. Now, what are the consequences if TDS not deducted? Interest to be paid along with the TDS amount else the amount shall be determined and recorded as per the law. And TDS certificate not issued or delayed beyond the prescribed period of 5 days, then 100 rupees every day, subject to a maximum of 5,000. TDS deducted but not paid to the government or paid later than 10th of succeeding the month, then interest also supposed to be paid along with the TDS amount shall be determined as recovered by the law. TDS filing of TDS return, the late fee of 100 rupees every day during which such failure continues subject to a maximum amount of 5,000 rupees. So this is how a TDS need to be taken into the consideration. And here who is the person eligible to deduct TDS? The government has a mandate the following persons called as a deductor to deduct TDS at the rate of 1% under CGST and 1% on SGST from the payment made or credited to a supplier or deductee where the value of supply exceeds 2,50,000. Okay. Now, as a place of supply is within the state of registration, no deduction shall be made if a location of supplier or place of supply is different from the state of registration of the recipient. This is what relating to the TDS. Okay. The tax collected at source is applicable for electronic commerce operators. That is Flipkart, Amazon, whatever the online business people, they are supposed to come under the tax collected at source. So it is exclusively related to the tax collected at source, operates or manages digitally or electronic facility or a platform for electronic commerce. The provisions of TCS, the payment of taxes, if you take into the account, normally the payment of taxes are required to be made by the supplier through electronic commerce operators. Okay. The next we will take into the account now, there are certain conditions to be followed. Such supply made through an e-commerce operator by some other supplier, where a consideration with respect to such supplies has to be collected by such e-commerce operators. Now, the rates, as you know, it is 1%. And to whom the TCS is to be payable, that is, within 10 days from the end of the month in which the collection has been made. The payment shall be made to the appropriate government, which means the central government in case of IGST and CGST, state government in case of SGST. Now, every operator who collects TCS shall furnish a monthly statement, which is the form is GST R, written is R, 8, it is the number is 8. Containing the dates of outward supplies made through it and the amount collected during the month within 10 days from after ending the month. Every operator who collects the amount specified shall furnish an annual statement containing the details of outward supplies affected through it and the amount collected during the financial year before 31st December following the end of the financial year. Now, returns to be deducted under Section 52 of GST Act makes a provisions regarding the collection of tax at source in case of the goods supplied by the electronic commerce operators. So, whatever the which is repeated, returns to be deducted. So, the operators who are collecting the tax at source on net value of the taxable supply is in the said month after deducting the returns is supposed to be remitted to the concerned party. So this is what we are supposed to do under the TCS. The rest we will discuss in the tomorrow's class. Okay. And any doubts, Nana? Any doubts you have? Any doubts you have?
No, ma'am.
No? Are you following?
Yes, ma'am.
Yeah. So tomorrow we will be discussing about the remaining part, and we will move on to the next block, the block 3, I think so. Isn't it?
Yes, yes, ma'am.
Yeah, block 3, what are the topics we have? Do you remember the topics?
No, ma'am. Presently, I am not having the textbook with me. Actually, I
Okay.
am in my workplace.
Okay, fine. Okay. So tomorrow we will discuss that.
Yes, ma'am.
Okay, Nana?
Yes, ma'am. Ma'am, tomorrow is the last class, ma'am.
Tomorrow is the 3rd class. We have another 3 classes also.
Okay.
Okay?
Okay, ma'am. Okay.
Right, Nana? Thank you. I'm leaving now.
Okay, ma'am. Thank you.
Thank you, ma'am.
Yeah.